Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the Dow Jones Industrial Average, the Dow 30. It's April 19th, 2020. Took last week off for Easter. Happy to be back. If you want to stay up to date with all of our videos, make sure you click that red subscribe button on the bottom right-hand corner of your screen. Okay, now we're looking at the weekly chart here, weekly candles. My sentiment is overall bullish. This was a nice bounce, and it did close above this 22,500 line, right? So we get support there now at 22,500. We see it that zone first tested in December of 2018. Big sell-off. Price body of this weekly candle closed above that line. And now we see after a couple weeks testing below that, prices did indeed break back through, which puts us in a really good position. Now, we're not out of the woods yet. We can't call it a bull market yet. I mean, I am bullish as far as like near-term price action. However, we have a couple things, just a couple challenges. So we've got at 26,000, right? I'm bullish mixed, meaning I think price will go up to about the 26,000, this index average. But we see resistance here that goes back to 2018. Okay, so we see here, early 2018, price went through and then was quickly rejected. Couldn't get back above it for most of the year. Did, then was rejected again, spent all of 2019, early 2019, trying to fight to get back above that line, right? So multiple rejections. So once we visit that line, it's not going to be an easy street, so to speak. I think we might see another micro sell-off. So traders are trying to make back their money they lost here, right? You buy the bounce, and then you wait to get about as high as you think, and then you cash out, which sends prices back down, and then you buy in again. So, you know, a possible scenario could be, we see our one, right? Price goes up and visits this line, and then we see our next sell-off, which puts it price back here, but that's okay because we look back and here's our multi-year uptrend. Right? This goes all the way back. We're running on top of this trend channel from the peaks of 2008. Okay, so price was underneath this line, underneath it, broke above, tested, went plunged below, through it. Now a quick kick back up. That's great, and it's even okay if price comes down to this two part. Even if we have some more selling, it drops a couple thousand points, no worries, because actually this is a more, call it safer buy, right? Because here you're just hoping that's the bottom. As long as we see price action over the rest of the year hold above 22.5, we've got that proven bottom, and we can, you know, that's the buys back on. Short term, we need to see buying really ascend through the 26,000 mark and hold above it, right? So we got to be careful. It could be just like back here, price rockets back above it and then boom, sell off. So another big sell off might be waiting here at 26,000, but overall bullish, which is really good to think about. So people's, you know, general portfolios aren't completely nuked. But however, they're going to have to hold. They're going to have to hold for a couple years. We can see if we were to drag out this chart a little bit longer, and let's say price just happens to stay in this long ascending price wedge, testing 22.5 several times, could be up to 2024, that's right, 2024, until it breaks out back bullish again. But that's okay if you're relatively young, you're not going to cash out your 401k anytime soon, or you want to just, you know, put your money into blue chip Dow Jones stocks, and you plan to hold for a few years, that, you know, these are great buying opportunities. Let's wait and see if price dips back down early or late 2020, early 2021. And that's when we'll, you know, look for your next buying opportunity. Let's go ahead and look at our daily real quick. Think about this week's price action. Okay, price is bullish, moving above the fast-moving average, looking like it's well on its way to touch our number one target right there. If we look at the hourly, we can kind of think of this as like it's a little too small. Let's go to the 4 hour. Take your micro daily. Here's our short-term trend as we approach the 26,000 mark. We see price moving above this line, right? So, lots of buying opportunities in this over the next few days. Each one of these 6 of these candles represents 1 day of price action. Price is moving above the 4 hour. And the longer this takes and the more gradual this is, the better the scenario for a bullish breakout. The quicker it is and more whiplash, knee-jerk it is, the more chance it's going to need to come back, retrace, and start over again on this move to the top. So, anyways, bullish, looking good. That's a good sign for everyone, as a lot of people use the Dow Jones as their kind of main economic indicator about whether or not they should be scared to death or not. So the chart says, don't be scared. All right, everyone have a great week. I wish you lots of profits.